Indian markets have seen a period of impressive growth recently, and in this rally, defense stocks have taken a central stage. Defense stocks have in fact had a meteoric rise in the past few years. The average return of defense stocks in the last 1 year has been 160%. This growth is backed by order book expansion and the rise of exports from the Indian defense manufacturing segment. Indian defense exports have grown up to a size of 21,000 crores in FY24, which is 30x the times of defense exports 10 years back. The growing earnings as well as the expanding order books do justify the price growth that these stocks have seen. But some investors in fact speculate that this frenzy could in fact be a bubble. So in this video, we will dig deep into the growth of the defense segment in India and understand if there is a scope for further growth or have these stocks reached a bubble territory. India has one of the largest military budgets in the world, with our recent military budget being $61 billion. Along with this, India is also the second largest importer of defense equipment in the world after Saudi Arabia. We in fact import 9.2% of the world's defense exports. But India has the aim of becoming among the 5 largest defense exporters in the world, and we aim to target 5 billion in terms of exports in FY25. So with this type of ambitions in place, there's obviously a lot of scope for growth. Let's try to understand what are the different players in India's defense manufacturing segment and how they are positioned to gain from the India's defense boom. So Indian defense manufacturing segment can be categorized into 3 broad categories. There are these PSUs which are involved in research, manufacturing as well as maintenance of existing systems. Then you have private players who also contribute to the research aspect, manufacturing, electrical equipment and so much more. There are also foreign players like Boeing which are involved in the defense manufacturing segment. Now let's try to categorize some of the shining stocks in the defense segment into different categories. So the first category of stock that we will look at is the aerospace and defense equipment. So in the aerospace segment, you have some of the highest trending stocks. You have Astra Microwave, which is involved in manufacturing of the microwave equipment for defense manufacturing. You have BDL, which is involved in manufacturing of missiles and other defense equipment. You have HAL, which is involved in aircraft manufacturing and other equipment in the defense segment. You have Idea Forge, which is involved in the unmanned vehicles. And then you have Taneja Aviation, which is also involved in different aerospace components. If you look at the performance of these stocks, you will see the best performing stock in this segment is Taneja, which has given more than 200% returns. And HAL and Astra Micro are not far behind, touching close to 200% returns in the last 1 year. The second set of companies we'll talk about is the electronic manufacturing in the defense segment. Here you have Bharat Electronic Limited, which is involved in the electronic equipment manufacturing for the defense segment. You have stocks like Data Patterns, MTR Technologies, which are also involved in electronic component design and manufacturing. And then you have Zen Technologies, which is involved in creating combat training equipment for the defense segment. If you look at the performance of these stocks, again, you would see BEL is one stock that has stood out and has performed more than 200% in terms of returns. Now, along with the aerospace and military equipment, there is a lot of shipbuilding and navy equipment that are in place. So there are another set of companies which are involved in shipbuilding and marine equipment manufacturing. Here you have standout stocks like Cochin Shipyard, Garden Reach, Mazagaon Dock, which are involved in manufacturing, repair as well as design of large warcraft as well as submarines involved in the defense segment. If you look at the performance of these stocks, Cochin Shipyard is in fact a stock that has grown almost 700% in the last financial year, and Garden Reach Shipyard as well as Mazagaon Dock have also not been far behind, each having performed more than 200% in the last financial year. Finally, there are material and engineering stocks in the defense segment. You have BEML, which is involved in earth moving and construction equipment. You have Midhani, which is involved in specialized metal, specialized aluminum manufacture. You have Sika Systems, which is involved in adhesives and sealants. Naib Limited is also involved in manufacturing of materials. And finally, you have Solar Industries, which is involved in manufacturing of explosives for the defense segment. If you look at the performance of these stocks, again, Naib and Sika have grown more than 300%, and Solar Industries is also not far behind, having rallied more than 200% in the last financial year. So now let's try to understand what are the reasons behind this boom in the defense stocks. stocks. So one of the main reasons for the growth in the defense segment is the government initiative. The government of India wants to become self-reliant. They want to manufacture defense equipment indigenously. They want to reduce the imports coming out from the foreign countries for the defense equipments, and they want to become net exporters of defense equipment. Here you have things like the modernization drive that is going out in the defense segment. The Make in India initiative, the Atmanirbhar Bharat initiative is helping defense manufacturing. And finally, there's an indigenization push where the government of India categorizes certain equipments to be only manufactured in India, curbs the import of those equipments, and sort of boosts the growth of these defense manufacturing companies. The rising defense budget also incentivizes the defense manufacturing stocks in India. Finally, the geopolitical landscape in the world is leading to indigenization of defense equipments in India. India wants to be self-reliant in terms of defense manufacturing in this volatile geopolitical equipment, and that is boosting domestic defense manufacturing. So a confluence of these factors, India trying to be self-reliant, India trying to export defense equipment, and the rising demand of defense equipment in the world is leading to the growth in the defense segment. Now let's try to understand the order books of the defense companies and understand if these valuations are in fact justified. So if you look at the order books of defense companies right now, you would see a significant amount of outstanding orders sitting with our major defense companies. Stocks like HAL boast of an order book of 94,000 crore, BEL has order book of 76,000 crores, and even Mazagon Dock has an order book of 38,000 crores. This showcases that in fact the demand and the future outlook and future earnings are relatively set for these companies. But what we have to understand is that is this valuation, even with the back of these strong order books, justified? If you look at the PE ratios of these defense stocks, they have gone from the range of 20 to 40 in the last financial year to the range of 60 to 120 in the recent financial year. So the valuations have in fact gone 2 to 3x only in the last financial year. And with such high valuations, there is a lot of risk. If you look at the sectors which have seen very high valuations, any small decline in earnings can lead to massive selling in those segments. That is why we have to be a little bit careful with these defense stocks. If we try to understand the order books of these companies, you would see that there are in fact a few concerns. Defense stocks typically have a very long execution cycle. So even if they get an order book, it doesn't mean that they will deliver on those numbers in the next year. It takes typically 5 to 10 years for them to execute a defense project. And while they are trying to execute those orders, there are execution risks, there are cancellation risks, as well as hidden costs that can come up in manufacturing of these equipments. So let's finally try to understand what are the growth triggers as well as risk involved in defense manufacturing. So the factors that are favoring defense manufacturing are the government push, the ambition to become exporters, the technological innovation that is happening, as well as successful project execution that Indian companies have done. In terms of risk, you have things like the change in government policies. If the government disincentivizes this particular segment by a little bit, that could have a big impact in terms of these stocks that are highly valued. You could see risks in terms of execution delay. You could see global fluctuations, global slowdown impacting this aggregate segment. So in conclusion, the defense segment is giving us a lot of opportunities. So the growth potential in the defense segment is real. We are seeing the prices rise with actual order book expansion, which means that we have a long runway ahead for earnings. But what we have to understand is there are risks as well. This segment is highly dependent on government spending, and any change in government policies can lead to big fluctuations in this particular segment. Along with it, you also have a certain risk like execution risks, as well as concerns in the geopolitical scenario. So the bottom line is that defense stocks still look attractive based on their order books, but we have to look at this segment with a lot of caution because the segment has become highly valued. There's a lot of high beta risk, and any changes can lead to a lot of fluctuation in this particular segment. So what I would recommend is that we look at this segment with a cautious optimism, have some allocation defense stocks, but be careful about it. So that was our video on defense manufacturing. If you like this video and you found this insightful, please do hit the like button, comment on our video, and do share it across to all your friends and family. Do write in the comment what you would like us to talk about next. We'll see you in the next video. Till then, happy investing.
Investment in securities market are subject to market risks. Read all the related documents carefully before investing.